Well, it's 6:15. Time now to say good morning to Mike Eppel for the latest in business news. And of course, with the breaking news overnight, the Russian invasion of Ukraine. We are watching the markets closely, and they're already reacting.
Yeah, sure are, Tammy. Good morning. We're watching a swift and severe response from global financial markets. And I think the bellwether is actually what's happening in the oil trade right now, with the price for oil on the U.S. benchmark above $100 per barrel for the first time in 8 years. If there is any type of supply disruption, that is what the market is the most worried about right now. Russia's a major producer. It is part of OPEC. It's always OPEC plus Russia when we talk about the cartel meetings. And it's a major supplier to Europe for energy products. So oil has spiked by about 8% at last check. Natural gas is up 6%. The global stock markets are looking at this as a sell signal. And keep in mind, they were already severely to the downside over the past several trading days as this crisis continued to build. And the hardest hit right now, again, the tech stocks, companies that may or may not have their earnings actually disrupted by this, but it doesn't matter because the computers are selling on algorithms based on headlines. So Apple is down a couple of percent. Microsoft's down 2%. Tesla down 5%. I use these as the benchmarks sort of from the daily guesswork, I suppose, at this point to see how bad the markets are going to be when we open for the North American trade. The European stock exchanges are down 3%. But also have to mention what's happening in Russia itself, with the stock market there down the most ever. So this is not, without economic consequence for Vladimir Putin at home, as Russians are seeing their equity value go up here in very short order, or I should say plunge, by anywhere from 30 to 40% in a single day. Wow. And the ruble has dropped to a record low as well. I just saw that headline across the business wires just moments ago. And
this is just within the first few hours, of course, of the invasion itself. We've been talking about inflation, food prices, and so on, and this could really hit you in the pocket again when it comes to food and groceries.
Again, the supply chain. And the fact that Ukraine is a major producer of wheat and corn, a supplier to Europe. So if their supply is disrupted, their output, then there's a shortage. And we're seeing this already ripple through the global commodity complex with wheat prices, corn, soybeans, all skyrocketing here in early trade. And keep in mind, they were already at multi-year highs. So it's not, just because it's over there doesn't necessarily mean it doesn't hit us here. So it's going to affect the global commodity complex in short order. How long, we don't know. But nevertheless, seeing some major inflationary risks. And then you come back to central banks because they're talking about raising interest rates. Raising interest rates doesn't change that dynamic right now. So it's going to be very interesting here. Again, we're early into this. And it's going to be very interesting to see exactly how global powers obviously react, and from a monetary standpoint as well.
Right. Speaking of money, we have RBC putting in their quarterly earnings as well. What was that like?
Yeah, completely overshadowed. Typically, we'd be leading with the Royal Bank's earnings performance. They literally just came out $2.86 a share, billions of dollars in profit. Investment banking, very strong numbers for the RBC, but again, that's not going to have any specific effect on the company's share price today whatsoever because, again, the global markets are down. Everything is about Russia and Ukraine this morning.
Yeah, and we will be watching closely. Thank you so much for that update again, Mike. We appreciate it. All right, and again, when it comes to the Russian invasion of the Ukraine, coming up after the break, we'll have World Reaction next.